Today we're going to talk about the logistics of a policy loan. How do you go about requesting a policy loan from your insurance company and repaying it? Hi, I'm Olivia Kirk.
I'm Tim Yurek. We're from Tier 1 Capital, and we're here to show you how to regain control of your money.
So life insurance contracts typically come with this policy loan provision, which is a contractual guarantee that you have access to the money through this loan provision. So you're able to take policy loans against the cash value that's accumulated within your policy. The insurance company will place a lien against that cash value and distribute a policy loan. In a lot of cases, you're able to receive that policy loan either through a check or an ACH.
And, the key is that you're not asking permission or seeking approval. You're literally giving an order because it's a contractual provision. And because of that, that puts you in control of that finance function.
Exactly. So as long as you have the cash value available within the policy, you're able to borrow against it. It's that simple.
Yeah, and there's a reason for that. The entity that is guaranteeing the cash or giving you the loan,
The insurance company,
is also the entity that is verifying that you have the equity in the policy.
Yep. So they're in a very unique position in that they're holding the loan and they're also holding the collateral, right? So they know they're going to get paid at the end of the day. Even if you're to die, they'll just reduce your death benefit dollar for dollar for that outstanding loan.
Yeah, and in essence, if you die with an outstanding loan, the reality is you took an advance on your death benefit. Mm-hmm. So you actually got to spend some of the death benefit on your policy, which is a neat little thing.
Yeah, for sure. And it's certainly unique to the whole life policies. So as far as logistics, how do you go about getting that policy loan? Usually you'll call up your agent or your insurance company. You'll be able to request it via form, definitely. Usually probably online as well. And then sometimes you're able to call and request over the phone. Each individual insurance company will have their own rules and procedures around that. And typically they'll process that in about a week, give or take.
Okay, so now you got the loan. Now the question is, how do you pay it back? Well, the insurance company is not going to hand you a coupon booklet or statements, send you statements every month. It's an unstructured loan, which means it's your decision on how, if, and when that loan gets paid back. And if you understand what we're saying here, you're in complete control of the payback function or the finance function in your life. And because of that, that's why people like taking policy loans. Number one, they're giving an order, not asking permission. Number two, they decide how, if, and when that loan is paid back and what the terms are. Now, the insurance company clearly determines what the interest rate is. Mm-hmm. But the decision as to whether or not you pay the interest out of pocket is completely up to you. And that is where you get this issue or this feature of control.
Exactly. So we do recommend paying back at least the loan interest because otherwise it will accrue onto the loan balance. But as far as deciding how, if, and when to pay back the policy loan, that's up to you. So a lot of people will, let's say you're getting a bonus in a few months. You want to pay off your policy loan. You have that option. Let's say you have an extra budget, let's say $50, $100, $200 that you want to pay towards your policy loan. You're able to do that on a monthly basis as well. And the options there would either be setting up an EFT from the insurance company where the insurance company will pull from your bank account, or you could set up bill pay at your local bank if they have that option, where they send in a check to the insurance company and apply it towards your policy loan on a monthly basis. And then the third option would be to, send in a check to the insurance company and write in the memo, okay, apply this towards my loan principal, and the insurance company will do that. And the cool thing about policy loans is as you pay down that policy loan principal, the equity that's available within your policy is increasing as we're going along, right? So now you have, in a sense, two hoses filling up your bucket. You have the premiums going in on a monthly or annual basis, and you have the loan repayment going in to replenish that cash as frequently as you would like.
Yeah, and again, the key is you're in control of that payback function. But because you're in control, one of the general rules we share with our clients is never take a policy loan unless you have a process of how you're going to pay back the loan.
Right, right. And so even though you don't have to pay it back in any particular way, you don't want to just leave the loan outstanding for the life of the policy, right? Because then it's not necessarily a financial tool. It's kind of an empty policy, right? It's a policy with a big empty hole in it, which isn't a problem, but it's not how the tool was meant to be used, in the sense of, we're talking about how to regain control of your finances. If you just have a big policy loan and no equity in the policy, it's not going to be working as efficiently as possible.
Yeah, and again, because you have the flexibility on how you want to pay it, I mean, just in general, we have clients who, let's say, borrow against their life insurance policy and they invest in real estate and they flip a real estate project. Well, it may be 8 months before from the date of purchase of the property till the point where the property is now completed and ready to sell, and then maybe, let's say, another 2 months to close. So sometimes that client will pay interest only on the loan. Sometimes the client will pay nothing until they flip the property, and then they pay back the loan and the accrued interest at that time, and then they just rinse and repeat. Sometimes they set up a payment plan. It doesn't matter because they're in control of the payback function.
Well, the point is to treat your money with the same respect that you treat the bank's money, right? So if the bank is going to have you pay back that loan at X rate, then do that with your own money. Respect your own money the way you respect the bank's money. Don't just use it and abuse it, but instead respect it and pay it back the way you would.
Yeah, that's a terrific point because you have the flexibility, the tendency is to say, well, that's okay, it's my money. But because it's your money, you should treat it better.
Yes, with great power comes great responsibility at the end of the day. If you'd like to learn more about how to use policy loans in your specific situation, be sure to check out our website at tier1capital.com. We'd be happy to talk to you about your specific situation. Just click that schedule a free strategy session button. Also, if you like this video, be sure to give us a thumbs up and check out these two. We picked them out special for you.
Thanks so much for watching our video. And remember, it's not how much money you make.
It's how much money you keep that really matters. We'll see you in the next one.